what most people get wrong is incorporation needs to be done at a time where it makes sense when you're servicing someone. What that means is that when you are servicing someone and there's a potential legal liability that could happen for you, or if you didn't perform a service, you need to protect yourself because corporation is a separate person. So they can only touch that person and not you. When I see, don't get me wrong, I have a lot of directors and producers and actors on my client list. None of them are incorporated because they want the accessibility for cash, right? Just when I spoke about incorporation before, it was all about like, how to take out money from the corporation. With a sole proprietorship, you have access to that money and still be able to deduct your expenses. Because with this gig economy, right, there is a potential of you not getting a gig for 6 months. You auditioning, you doing everything, you not working out. Brand influencing is different, right? Because that could be for a certain product. And that product could accelerate over 5, 6, 8, 12 months. Or you can have none and be like, we just need you once and that's it. Incorporation should happen when there is a potential growth in your like basically your brand deals. And secondly, you have gigs lined up, right? Because then you have a steady flow of funds coming in. Don't go incorporate just because you're got a great gig and it's going to make you 40, 50K. Like it doesn't make sense for you, right? Because your expenses are going to be high as just as much as up there too.
Welcome to the Ontario Homeowners Show. I'm Mohsen Lakhani, and this is the show where we get real about what it takes to own, maintain, and love your home. From renovations to raising a family, legal insights to mental health, no topic is off limits. This is about real people, real value, and real conversations to help you live better, right where you are. Each week, I sit down with trusted experts, service professionals, and local changemakers to bring you the strategies, stories, and solutions that make homeownership easier. This is the Ontario Homeowners Show, powered by the Vaughan Real Estate Advisors. Are you ready? Let's go. Harpreet, my man, how are you today?
Good. How are you?
Doing well, brother. Thank you so much for joining us on the Ontario Homeowner Show. It is an immense pleasure to have you here today.
Thank you for having me.
Thank you, sir, for coming. You know what? Before we dive into everything else, I know we've got a lot of value we're going to be providing to our listeners today. Just start off by telling us a little bit about who you are, what you do, and how you got into accounting.
That's a loaded question, my friend. My name is Harpreet. I run a professional corp, Malhi Accounting Professional Corporation. Been practicing tax for about 15 years now. Have my CPA and my master's in tax as well. To be honest, accounting wasn't my forte in the school at all. But tax was. So I really enjoyed tax. I like helping people understand. My true heart and soul of this business is education. So whether it is personal finance, corporation related, it's all about education for me. And that's why I loved what I like doing, you know what I'm saying? So it just makes more sense to like educate because it seems like the financial literacy aspect, even when I was growing up, it's not there. So educating, whether it's, business owners or individuals, it's something that I strive to do.
Beautiful, beautiful. And you know what? To your point, we should, as people who live here in this country, live in Ontario, we want to be a lot more aware of what our financial literacy looks like, and not just ourselves, people around us, because you can really see this gap of majority of the people do not even know what a TFSA is, what an FHSA is, right? How to do their taxes. They don't know A from B, and they're stuck in figuring out in this rat race, how do I get to Z? So
Agreed.
thank you so much for spreading the word, for teaching the people on how to stay updated, how to do their taxes better, how to live better right where they are. Thank you,
Thank you.
sir.
Trying, my friend. One client at a time.
That's it, brother. That's all we can do, right?
That's it.
Tell me more, man. How have you helped homeowners this past year, 2 years? It's been a very difficult time for a lot of people living in Ontario today.
Yeah. So where accountants come in is more on the planning side, right? So when it comes to individuals that own corporations, right? The whole point of a corporation is to, shelter the tax, right? Because it's an effective lower tax bracket. When accountants are approached that, hey, like this is when the conversation with the homeowner start, right? Whether it's a new homeowner or someone doing other investments that they want to do, but more so the new homeowners. It's like, hey, I'm making this much money, but I don't want to take all of it out because it's going to personally impact me. that's where the accountants come in from a planning perspective. Um, Example would be I have a lot of travel nurses that are very successful in what they do. And the whole point of their corporation is A, protect themselves, and secondly, shelter themselves from a personal tax burden.
Mm,
So what they do is obviously incorporate. But now when they go want to purchase the home, you cannot leverage your corporation to purchase a home. You have to show some personal wealth. So this is where accountants come in. It's like, hey, if you're looking, for instance, if you put a down payment down, the thing is going to close in 3 years, you start planning backwards, right? Hey, let's take out X amount of dollars because when you go apply for a mortgage, they're going to look for the last 2 or 3 years of notice of assessments. They're going to say, like, hey, you made X amount of dollars. Your corporation is there and stable. So that's where we as accountants come in. That's a prime example where I've helped someone who's actually going to own her home next year.
Amazing. Amazing. So, pardon my ignorance for a second. If I run a corporation, if I'm incorporated, whether it is, just um whatchamacallit, not a sole proprietor, but let's say
Yeah,
I'm working
incorporated
on
business.
incorporated business,
Yeah.
right? I'm in real estate. If I'm incorporated, that's one thing. But if I'm not, we're talking about travel nurses, they get paid contractually, and
Uh-huh.
they might have created an incorporation. They're incorporated. They're getting paid by means of that. How long do I need, and what do I need to show in order for me to be able to make that decision? That, hey, you know what, I can maybe look at getting an investment property now.
It all depends, right? So when it comes to like real estate agents or travel nurses or anybody like that, it's like, what is the end game, right?
Hmm.
So this is where we, as an educator, right, you have that conversation. It's like, what are you trying to achieve with all this net worth that you're trying to build in your corporation? Um, the value changes, right? Bank of Canada drops their rates, it changes. Like how much, what is a
Hmm.
threshold? What is like, how much you can actually obtain based on how much income you have. What I've seen with a lot of my clients going for first mortgages is that they need to have a good, successful 3 years, at least $100,000, right?
Okay.
Top line, right? That could be a form of salary or dividends, right, from a corporation. So that kind of helps leverage them to be getting a higher mortgage from financial institutions.
Mm. Okay, makes sense. So essentially, if you're paying yourself out of a corp account, make sure you're paying yourself enough to be able
Yeah.
to show that consistently, that hey, you have enough essentially dough in the bank, to make sure that you can afford that property purchase you're eventually going to be looking into, or asset, whatever asset you're trying to purchase.
Yeah. And without actually impacting you personally too, right? Because when you
Right.
draw money, you're going to pay personal taxes, right? So you
Right.
have to make sure that you're not drawing too much
Mm.
so that you're still able and comfortable to pay back that balance to the CRA, right?
Right on.
So it has to be very carefully calculated. And that's where, like, have your conversations, right, with your accountants to be like, hey, like, this is what I'm trying to achieve. Like, what do you think the best suit is, right?
Mm. Okay. If I have, let's say my corporation is receiving $120,000 a year in,
Hmm.
income, and my personal expenses day to day are about 100K a year. Should I still be putting it into a corporation, or would it rather be easier for me to get paid the regular way? Because I don't know if that 20 grand is going to really offset my taxation.
That's a great question, right? So, like, I get a lot of young entrepreneurs that are like, I want to incorporate. Okay, that's fine, incorporate. But does it make sense? Because incorporating a business is $1,000 for a lawyer to do, right? Then you pay an accountant an X amount of dollars for compliance upkeep,
Hmm.
right? Then you have to understand and educate yourself on salary versus dividend. How much can I take out? So, is it really worth it for you? In
Yeah.
your example, it really isn't because my whole thing about incorporation is that you should be at least 50 to 70K net. So that means after your expenses for it to be beneficial for you.
So essentially,
Because
that 50K is left over in the corporation
that's
after
right.
I've paid myself.
That's right. Then it makes sense because then you're taxed at
Mm.
12.2% versus
Right.
if you take that 50K top line, no taxes deducted, you're going to be at a higher tax bracket, right?
Right.
So with all your other personal income that you have,
Mm. So would you say it's more of a tax strategy more so than anything else?
incorporation, yes, it is. Yes. Right? There are many people that are comfortable being sole proprietorships because they have access to their money, right? The biggest difference is like it's attached to you. That's how I see sole proprietorship, right? It's a part of your arm, right? Whereas an incorporation is a separate person. So think
Right.
about it that way, right? Like if you get money from it or you loan it money, it's like all loans to you, right?
Mm. Right on. So who do you think you help the most, right? Like, are they people who've incorporated businesses? Are they the everyday Joe who's getting paid a fixed salary? Who do you feel your ideal client is?
My ideal clients are mainly corporations, right? Because of the tax planning and the strategy that's involved. That's not to say that the personal people that are getting T4s are not my clients either. I have significant personal clients
Hmm.
that like, get T4s, but they want to understand like, hey, should I deposit into a first home savings account? Should I do TFSA? Oh, I heard TFSA is tax deductible. I'm like, no, it's not. Right. So RSP, like which one's better for me, right? So it's education them on the registered accounts, right?
Right.
You have a lot of high net worth clients too, right? That like, hey, I've topped everything up. Okay, right? They're doing their own thing, right? But
Mm.
then if they're in buying investment properties, then it's just like, okay, what do I do with this? Do I incorporate? Do I keep it separate from what I'm already doing? Right? So again, it's all about strategies and what you want to achieve as an end result.
Right. Could you share a little bit about what those strategies could be implemented? Look, we're at the end of the year, right? We've
Yeah.
got on our listeners consist of homeowners who already own properties. Um, they're also going to be people who invest in real estate.
Uh-huh.
We're also attracting people who want to be homeowners, right? So maybe as if you can give me three tips, a tip for an existing homeowner, what they can do this year before the year ends on how to save some money on taxes, an investor possibly, what they can do to save money come tax time, and for people who are renting, what they can do to save money come tax time. What are the three thing or one thing for each of these people that they can implement to save some money come tax time?
So from an investor standpoint, the question is like, what should they do to save money for their investments? Ideally, like if they have registered accounts, they can use registered accounts. So essentially how it works is like, you draw money from a corporation, form of salary, you create RSP rooms, you can dump that into RSP, get a tax deduction on your personal taxes, right? So that's a concept, one concept from a investor perspective. Someone that's already a homeowner, that one's a little tricky from a personal tax point. They really only have registered accounts unless they drew them all out for their first home, right? So if they have a home buyer's plan that they're got to pay back after two
Right.
years, right? So they really don't have much, right? Because they've already earned that equity. However, it's like earning equity in your home is also a benefit to you, right? Because then you can draw that equity and invest into a different home, right?
Absolutely.
And that interest is deductible on your personal taxes
Or a different asset
or
altogether.
a different asset, right? But CRA guidelines are that, if you use your equity and you pay interest on it, that interest is deductible for tax purposes. So that's for people that already own a home that have
Hmm.
significant equity in it, right? Use that, invest into RSP. If you don't have all those things already, use that interest deductibility, right? So, and then for renters, that's a tough one. It's hard to save money as a renter, right? Because technically, it's like the cash flow is already there that's coming out, right? Um, should like
I
it's
mean,
very, very difficult.
technically, if you're owning a home, you probably have mortgage payments. I want to say
Correct.
majority of the people who own homes have mortgages.
Yeah.
Um, sure, there's a good percentage that own their homes outright,
Yeah. Yeah.
right? But most homeowners also carry debt by way of at bare minimum a mortgage payment. For renters, it's tough because yes, you've probably got all these other forms of debt. Possibly, you might have a credit card, you might have another line of credit, um, car payments, and then you're paying your rental
Yourself.
payments,
Yeah.
right? Um, what do you think they can do come tax season to save? Just it could be something to offset, right? For example, my traditional wisdom is always, hey, you know what? Amazing. You want to be a homeowner, start maxing out your, since last 2 years has been your FHSA, right? Your first home savings
Yeah.
account.
Yeah.
Max that out. Once you've maxed those out, hey, if you haven't opened one already, go ahead and open one, because if you haven't opened it, you open it before December 31st. Come January 1st, you're going to have $16,000 of room in there. And then start tapping into your TFSAs and your RRSPs.
I think that's the best advice to give to renters, right? It's like if you have registered accounts that you can open up, do them before
Mm-hmm.
December 31st, invest in them if you have wiggle room and cash flow available. Utilize those accounts so that A, you can invest in those accounts as well, tax free,
Mm-hmm.
and then let them grow every year, whether it's like $100 per month that you're putting into it, right? That way you can let that, accumulate. Come one time when you're able to purchase a home, you have the accessibility of funds as a down payment, right? That is the purpose of those accounts, right?
Absolutely. I see time and time again, there's so much bad information out there. Good information too. Don't get me wrong, right? But this, in this age of AI, in this age of, information being readily accessible, we also have access to bad information. What are some of these myths that you're seeing that you want to bust today?
If you're not doing so already, it's probably registered accounts, right? A lot of people have this fear that I don't need to save for my pension or my retirement or anything like that. That's a myth, in my opinion, because those accounts are there for tax free, right? Like, earn some money, let it grow. I mean, again, not being a financial advisor myself, let the professionals do the financial advice. But when it comes to investments, like seek that help from those advisors and utilize your risk, right? Like if you have a certain threshold for risk, like let's say you have potentially $8,000, right? You got a great bonus in the year, whatnot. Open up a first home savings account, dump it in, gives you tax breaks. Then go to a financial advisor, or if you're good at stock, if you know someone that's good at stocks, do your risk factor, let it grow, because you never know. Next year it might be at 10, might be at 15, but that growth is not going to diminish your contribution room, right? So I think that's the biggest myth I always see is like registered accounts are crap. And to some people they might be, but to homeowners that are looking for potentially in the future to purchase a home or to put money away out of sight, out of mind, I think is like one of the biggest things, right? Hey, just dump it in there and let it grow for you.
Yeah, I hear you. And you know what? I resonate very highly with that, because hear this. I was speaking to a friend of mine, and they run a aging at home service,
Mhm.
and they were invited to a senior care living facility in Mississauga. There, it's on site living. Seniors are there. It's a very good community, but a 1 plus den with meals included was 17 grand a month.
Jeez.
That does not include care. So whatever care they need is going to be built separately,
Right.
right? So if you want to be in an environment that's going to support you, it's going to be expensive. It's expensive today.
100%.
17 grand is a lot of money, right? Per month. Now imagine what it's going to be like 20 years from now, 30 years from now, when the current generation, that are the new generation of homeowners, when they're going to start retiring. What is that going to look like?
And that's a lot of things too, right? Like a lot of entrepreneurs, I would say, younger ones, are all about making money, right? But
Yep.
it's not about like, hey, what could happen? Like rainy day funds, eh? Like no one really like when you're an entrepreneur, yes, I get it. Like business is your everything. It's like you wake up and breathe your business. I get it. But if you get sick, if something happens to you, what happens? And that's where I think like it's like a mindset that you need to build into yourself. Like, hey, like I made X amount of dollars this month. I'm gonna take a little bit of Y and put it somewhere else.
Right.
Because the days that I can't work and service my clients or do my business, I'm okay. Because a lot of entrepreneurs stress about I can't take vacation, I can't do this, I can't do that. Yes, you can. You need a break too to be good at what you do, right? And that's part of the education I do too, right? It's like, hey, like take a break. Don't get me wrong, like I'm an entrepreneur too. I work stupid hours too. But at the end of the day, I do need a break too. We're all human, right? And having that rainy day fund or some sort of backup to be like, hey, I'm gonna be okay. Th- that's something that, people don't rely on a lot.
We're seeing a lot of young people, right? They may be in college, they may be in university, they may not be. They may be younger. They might be in high school,
Yeah.
right? Or younger,
Yep.
but they're turning into social media influencers, creators, right? So we're seeing this movement where creators are taking the world by a storm. They don't necessarily they're never say never, but they're probably not going to be having a traditional 9 to 5, right? So they're going to be part of a gig economy. Now they might be basking in all this money and spending it left, right, and center and living a glamorous life, but they're going to mature. They're going to understand. They're going to fall on their face sometimes. They're going to stand back up, dust off, and continue. For people who are getting into the gig economy, the creator economy, and they're thinking about getting incorporated, what are maybe one or two things they should be on the lookout for before they make a decision?
What most people get wrong is incorporation needs to be done at a time where it makes sense when you're servicing someone, right? So what that means is that when you are servicing someone and there's a potential legal liability that could happen for you, or if you didn't perform a service, you need to protect yourself because a corporation is a separate person, right? So they can only touch that person and not you. So
Mm-hmm.
when I see, don't get me wrong, I have a lot of directors and producers and actors on my client list. None of them are incorporated because they want the accessibility for cash, right? Just when I spoke about incorporation before, it was all about like, how to take out money from the corporation. With a sole proprietorship, you have access to that money and still be able to deduct your expenses. Because with this gig economy, right, there is a potential of you not getting a gig for 6 months. You auditioning, you doing everything, you not working out. Brand influencing is different, right? Because that could be for a certain product. And that product could accelerate over 5, 6, 8, 12 months. Or you can have none and be like, we just need you once and that's it. So
Right.
incorporation should happen when there is a potential growth in in like basically your brand deals. And
Mm-hmm.
secondly, you have gigs lined up, right? Because then you have a steady flow of funds coming in. Don't go incorporate just because got a great gig and it's going to make you 40, 50K. Like it doesn't make sense for you, right? Because your expenses are going to be high as just as much as up there too.
Mm-hmm. Mm-hmm. Okay, makes sense. Have you seen circumstances where, as you mentioned, incorporating creates that layer? But have you seen any instances where that layer was breached and maybe not from I know this is not going to end up being a legal conversation, but have you seen the law kind of get involved because it was breached?
Yeah, I mean, like so think about it this way, right? Like you get hired to perform certain things. If you don't meet those obligations, A, you won't get paid, or B, you didn't perform the service, so we're gonna sue you because you didn't do the right things, right?
Mm-hmm.
I haven't seen it on the gig side, but I've seen it on more of a construction side, right? Because the gig side is very black and white, right? Like if you don't do it, you won't get paid.
Mm-hmm.
Whereas the construction side, it's like, hey, like you didn't perform the service. I wanted it flat. You gave it curved. I'm gonna sue you and all that stuff because it's a hazard for my employees, right? So it's a different concept in different industries. Where you can be a breach of contract when it comes to like gigs, it's totally dependent on what the outcome of the service was supposed to be rendered.
Okay. Okay. Um, brother, beyond beyond just the paperwork, is there anything you do to help your clients make better, more informed decisions?
To be honest, like I said, like education, like I talk to them. Like sometimes like I sit there and I talk to them for an hour. It's like, okay, what's going on? Right? Like
Mm-hmm.
what makes sense? How should we do next year? Like I literally was on the phone with a client earlier today. Like I had her, she's my client and her mom, and they were talking to me about like FHSA room. Like she's incorporated too. uh, my house is closing next year. What should I do this year? How much should I take out? So it's just like having those conversations. Don't be afraid to have those conversations with
Right.
certain professionals, right? Like whether it's a mortgage person, whether it's a legal person, advisors of any sort, right?
Mm-hmm.
Because the thing is, like, I think that's the biggest failure is that we sit, go to a bar and talk to someone and they give you like, this is how I'm doing it, this is how I got it. Not necessarily understanding how they got to where they got to, and taking that advice and be like, "Oh, I can do it the same way." It's
Right.
like seek the advisor's help. Like even for me, right? Like I seek legal help when I don't understand contract law, right? I don't
Mm-hmm.
begin to understand that because that's not my profession, right? When it comes to like, investing, that's not something I do. I seek advisor's help. So advisors are there because they're professional in what they do and they provide the necessary steps for you to be successful.
Hmm. So, brother, before we wrap up, what do you see is happening today? What are some of the mistakes that you're seeing that some homeowners are making that can be avoided?
Biggest mistakes I've been seeing is not filing your taxes. I have many, many clients that come to me, "Hey, I'm closing next year." I'm like, "Okay, cool. I haven't filed last 6 years, last 10 years, last 8 years." And I'm like, "Why?" Like, you don't really have to file if you have a zero return. I agree, but just file. There's benefits that come to you, right? And builds that continuity. Now you got back taxes, and now your bank is asking, "What's your notice of assessment? Where are they?" Right? So just file your taxes.
Just file our taxes. Guys,
That's
come
it.
on. Just file your taxes. All right, brother. Well, Harpreet, thank you. Thank you so much for all the time you've given me today. One last question. What do you think it means to be a homeowner?
That's a very loaded question. As a homeowner, it feels like something to call your own. You know, you built that equity after all the hard work you've done. It's like something to call your own is something that no one can take away from you, right? So I think that's something that means to be a homeowner. It's like something to call my own.
Beautiful. Beautiful. Harpreet, brother, thank you so much for your time. For the people who don't know you, how can they get in touch with you? Where can they find you?
They can find me on my website, www.malhiaccounting.com, or they can add me on Instagram, malhi.accounting. Um, or feel free, just look it up on Google and call me. We'll have a great chat.
Amazing. Brother, thank you again. Thank you so much for joining us today. Folks, that's a wrap on this episode of the Ontario Homeowners Show. Now, I do not know what resonated with you the most, but here's what I hope you took away. The guests that we're bringing on the show are change makers. They are specialists in their field, and their motive is simply to help you every day. If you have any questions for Harpreet, please feel free to reach out to him. If you have any questions for me, feel free to reach out to me. If you want to get the tips, the guides, the key takeaways for every episode, go to our website, ontariohomeownershow.ca. I'll see you on the next one. Thank you for joining.